Hey everybody, welcome to Mortgage Today for Friday, April 12th, 2024, and oh, what a day it was. We are finally getting a bit of a reprieve. We are finally getting a bit of a reprieve from the devastation of this week. UMBS opened the day up 27 basis points. We got import prices, which came in at 0.4 on a 0.3 forecast. It was 0.3 previously. Export prices were 0.3 on a 0.3 forecast. It was 0.7 previously. Stocks fell as bank kicks off earnings season with heightened geopolitical risk, spurring a flight to the safest corners of the market, like bonds, gold, and the dollar. Oil rallied. Equity futures pointed to losses at the end of a wild week as Israel is bracing for a possible attack from Iran, either directly or through its proxies, with drones and missiles on government targets within days, according to people familiar with the Western intelligence assessments. Treasury yields dropped after hitting this year's highs, and haven currencies like the Japanese yen and Swiss franc have outperformed. Big banks' first quarter results offered the latest window into how the U.S. economy is faring amid an interest rate trajectory muddied by persistent inflation. Housing affordability continues to be an issue as the median monthly mortgage payment increased to $2,747 according to research from Redfin. The median home price came in at $378,250. Boston Fed President Susan Collins is not a voter this year, but she still has some interesting things to say that should be noted. In a speech she has corresponded, I expect to see further evidence that inflation is durably, if unevenly, returning towards 2%. It may take more time than I had previously thought to gain greater confidence in inflation's downward trajectory before beginning to ease policy. I do expect it will be appropriate to begin lowering the federal funds rate later this year. Standard fare from the Fed at this point, data dependent. We want to cut, but we need data to give us the green light. She also said the current level of interest rates may provide less restraint than expected. Current financial conditions may be only modestly restrictive. The risks of monetary policy being too tight have receded. Friday ended up being reasonably pleasant, but mostly uneventful. Gains were in place from the overnight session on a combination of European economic data and central banker comments. Geopolitical headlines may have played a role at times, and end-of-week position squaring probably had some impact as well. None of the above really matters in the big picture. Bonds lost a lot of ground this week as inflation remained higher than the market had hoped. The end. Now we wait for the next big data with the power to change the bigger picture narrative, and that means we'll be waiting for next month's inflation reports. It's not that second tier reports like next week's retail sales or the following week's PCE inflation are incapable of moving the needle, but they'd have a hard time moving it enough to shift the bigger picture trend. UMBS ended the day up 20 basis points at 99.76. The 10-year closed the week at 4.528, but at that 99.76 on the MBS, that is putting us right in the middle of this range. So we have a floor at 99.647, which we bounced off of twice. And then we have the 200-day moving average at 100.096 with all the other trend lines well above it. So we got a lot of ground to cover to get back into that range. Next week, we do have a lot of Fed speak. So we got Logan speaking on Monday. We get retail sales. Daily also speaks after that. Tuesday is fairly light. Wednesday, we get Beige Book and Meester speaking. Thursday, we get the jobless claims, which has been moving the market an awful lot lately, as well as Fed Williams and Bostic speaking. Looks like Bostic is actually speaking twice on Thursday. I guess he needs the money. Must not have done great on those bond bets. Oh, I didn't say that. And then on Friday, we got Goolsby speaking. If you got some time over the weekend, check out some of our common influences, especially our sponsor at WellThatMakesSense.com.